Hello everyone, welcome to the Ichimoku charts.com daily analysis for the SP 500 for Tuesday, August the 18th. Well, a change of colour in the body of the candle today, and that means that the bulls have made net progress on the day from the open to the close. Now the market on the day opened near the low and closed near the high, which means that the bulls are in control of the market for the day, and the bulls have shown some commitment throughout the day. Unfortunately, though, they couldn't take out the high of the current candle to give us a higher high and a higher low, so that limits the amount of commitment that they showed throughout the day, and it means that we still don't have a change of trend to the upside. We still have a downtrend because we have a previous downtrend in place. We have a lower high and lower low, which is the first time frame downtrend, and still a second time frame downtrend. So very important that we have a second time frame downtrend. In bar chart terms, this is an inside day or an inside bar where the range of the current candle is engulfed by the whole range of the previous candle, which means indecision for the validity of the first time frame downtrend, and it means that there is potential there for the downtrend to end in the first time frame. In candlestick terms, it's also what we call a potential harami pattern, and it's only potential because we need confirmation of the reversal, and the confirmation will be a high high and a high low, so we really need to look at the high of the current candle for that to be taken out for a potential reversal of the first time frame downtrend to an uptrend. Now the harami pattern is when the body of the current candle is engulfed by the body of the previous candle. A similar concept to the bar chart reversal pattern or potential reversal, but with the bar chart it involves the whole range of the bar being engulfed by the previous bar. With candlesticks it just involves the body of the candle being engulfed, and as you can see with candlesticks, it's quite a difference between candlesticks and bar charts, that the body of the candle, the distance between the open and the close, is very important. Whereas in our normal bar chart analysis, we don't place as much emphasis on the distance between the open and the close and the configuration of it. So here we have potential for a reversal. Now, if we do reverse, then we need to look to the 1000 level as a potential area of resistance. Now, also, just looking at the pattern that we completed, we had a head and shoulders pattern. Here we had the left shoulder, the head, and the right shoulder, and the solid bearish close down below the neckline. That's the neckline there. Now, what can happen quite often is that when we have these reversals, and we're talking about a major reversal here of this major uptrend, when we have these head and shoulders patterns, we get the breakout, and quite often we get the retracement back towards the neckline, and that's what's happened here. So in terms of this pattern, this neckline holding again as resistance is very important for completion of the target, and the target will be down around this level. It's the distance from the top of the head to the neckline projected down from the neckline at the breakout point. So it's down around this level. I think it was around 969 or 968, and it coincided roughly with this support area down around here. So if we see any bearishness coming into this market, it offers another selling opportunity for trading this first and second time frame downtrend. If the market does do that, then we need to look to the support areas down around this level where our target was, which is roughly about 968, 969. Then we had this previous resistance area at 956, which now coincides with the Kijun-sen at this level, and that's a potential support area. Failing that, then there isn't support until we trade down to the Kumo, which is at around 911. So if either of those areas of support fail to hold, then the market has potential to sell off quite severely. But we are still in a first time frame downtrend. We need to look to the highs and the lows of the current candles and look for any bullishness or bearishness coming into the market on the next day. There is potential for the market to trade up, but the trend is still down, so the potential is still there to trade down.